Gold. Gold is down by over 120% in this couple of weeks since the beginning of February. So perhaps it's time to have a look at what's going on here. And we'll also have a look at copper this time as well. So what we see on gold is that we are in this ongoing very long daily cycle in gold. That is the second daily cycle in the ongoing intermediate cycle. And yes, if you look at some of my recent videos over the last couple of months, I had already been warning that this daily cycle is stretching into unusually long duration, and I was expecting a bit of a decline, perhaps a little bit too early, but we are observing a significant decline all through February at the moment. But the duration of this ongoing daily cycle is now 104 days long. I'm not sure if we've seen such a long cycle historically, perhaps not since the beginning of this bull market in December 2015. So this is extremely long, which tells me that perhaps the end of the cycle is pretty close, maybe another poke below the Bollinger Bands. As I often mention in my videos, repeated pokes outside of wide Bollinger Bands are sometimes a bit of a sign of a bit of a reversal in momentum. We see RSI has dropped significantly all the way down to 36, 37 right now. That's from the recent highs around 74 on RSI. So such a decline might be enough for the end of the daily cycle perhaps to play out sometime over the next few days, perhaps maybe even a couple of weeks, because as we observe extreme examples of this stretched duration of this daily cycle, it's hard to tell when such an extreme stretch will actually come to an end. But another encouraging piece here, if you throw in the Fibonacci retracement numbers over here on all of this daily cycle, the second daily cycle in the ongoing intermediate cycle, today gold is pretty close to retracing 38% of all of the previous rally since November last year. And usually, again, as I often mention in a lot of my videos, some of the most common retracement numbers are the 38, 50 and 62% retracement numbers. And if you look closely, this 50% Fibonacci retracement number isn't that far from the 200-day moving average, and both of those aren't that far from this psychologically round number of $1,800 per ounce of gold. So even if this decline continues down into a very long, very stretched daily cycle, perhaps that 1800 might provide some sort of significant support. Continuing to the market sentiment, for gold we usually look at the OPX optimism index for gold itself. In this case, as I'm looking at a daily cycle rather than an intermediate cycle, which usually lasts for around half a year, I would like to look at the optics for GLD, as it's a bit more volatile, more suitable for these relatively shorter term cycles. We see that this GLD optics drops below this green zone with each of these daily cycle lows. And often, but not always, we do observe a bit of a positive divergence from this optics, meaning that it produces a bit of a higher low versus a lower low on price. We saw that in July and October and November last year, but sometimes we don't see a positive divergence. In either case though, often the first plunge down below this green line on the GLD optics is followed by one or two more plunges down as price continues down into the true daily cycle low. And perhaps we might observe something similar over the next several days, perhaps a couple of weeks, maybe down to that 1800 to either produce a positive divergence on this optics or at least a repeated plunge down below this green line. That's how some of the recent daily cycle lows worked out historically, but remember that nobody knows the future. Next, let's have a look at seasonality for gold. Going back to 2015, that's again the beginning of that commodity bull market, and seasonality also agrees with our expectation of a bit of a decline perhaps down into mid-March, although that would produce a really unusually long daily cycle. In either case, seasonality does suggest that perhaps a bit of softness is expected down into end of February. And whether this decline only continues down into late February or perhaps sometime into March, we are still waiting for an opportunity to get back into larger positions in precious metals. Actually, as the model portfolio shows all of our trades, We had been expecting a decline down into the daily cycle low as this daily cycle was stretching into an unusually long duration. These circles over here on the GDX chart shows where I was selling GDX and indicating that on the model portfolio some of these earlier sales in late December are just where GDX is about to open right now. Some of the more recent sales are above the current price. In either case, that was with understanding that the duration of the cycle was getting significantly stretched. But looking at the intermediate cycle now, at a slightly longer duration, it's 147 days long. Usually these cycles last for around half a year, so a potential intermediate cycle top 127 days into the intermediate cycle is potentially pretty close to the midpoint of this intermediate cycle simply based on its duration. So there is some chance, perhaps a 50-50 chance, that gold has topped not only for the daily cycle but for the intermediate cycle as well. In either case though, we'll have one more bounce into the third daily cycle. Whether that will produce a higher high with an intermediate cycle topping closer to its right side, that's a right translated cycle, or if the bounce into the third daily cycle only tests, say, around number of 1900 before dropping down into the intermediate cycle low, time will tell. In either case, we will expect at least a bit of a bounce into the third daily cycle sometime relatively soon. But again, we'll have to wait for some signs of a turnaround in momentum. And let me remind you again, nobody knows the future. I simply share my opinion with you and hope you do the same down in the comments below. Next, let's look at copper. This is a copper chart going back to mid-2017. And as you know, I do like to look at cycles. And looking at cycles in any asset, you want to find some sort of signs that help you to identify these cycles. Looking at copper, the signs that I have identified over the last several years is that every cycle rally breaks above the 50 DMA for at least 5 days or more. Similarly, every cycle decline down into the cycle low breaks below the 50 DMA for at least 5 days or more. Although when the 50 DMA is unusually steep, simply a test of that moving average might be enough for cycle top or cycle low without staying above or below that 50 DMA for over 5 days. So the 50 DMA is one of the signals that I look at. Another one is RSI. With every cycle rally, RSI rises by well over 20 points and drops by well over 20 points with every cycle decline, slicing through the neutral level of 50 in both directions. And the third sign that I look at least on these charts, is the poking above or below the Bollinger Bands with each of the cycle lows and cycle tops. In addition, we do of course also want to look at market sentiment, so there are some other signals that you might want to figure out. So based on a range of these signals, copper cycles over the last few years lasted for an average of 132 days, around 4.5 months. But of course the duration varies, with the shortest of 59 days to the longest of 198 days since the middle of 2017. Now looking at what's happening right now, we've been in a cycle that's going on for 140 days already. That's slightly longer than usual duration. So perhaps sometime either over the next few days or over the next few weeks, we might see a cycle low. The question that I'm considering right now is whether this 50 DMA is steep enough to say that only a test of the 50 DMA is enough for a cycle low without staying significantly below that for over 5 days. Most of the other signs for a cycle low have been observed. We see a poke below the Bollinger Bands. Bollinger Bands aren't that narrow, but not very wide either. So if we see a repeated poke over the next several days, that would be an encouraging sign. RSI has already sliced below 50 and dropped by well over 20 points. We're testing the 50 DMA today, but again the question is whether it's steep enough for the test to be the cycle low, or do we need to stay below the 50 DMA for a noticeable amount of time. We'll have to see about that, but in either case we are waiting for a sign of reversal in momentum anyway. Where the important point is that we are getting ready to pull the trigger when we see some sort of a reversal with a clear strategy for a stop loss. Next, looking at market sentiment for copper optimism index. It's a little bit tricky, it's hard to read it. As you see, over the last several years, the cycle lows on copper came with this optimism index as low as 20 and sometimes just as high as 50. So this recent low on this optimism index, somewhere in high 40s, might perhaps be enough for a cycle low, but I would only give that, say, 40% chance. I still think that there is a 60% chance of continued downward momentum in copper, at least for a short term, at least for another few days. At least while the stock markets, this is SPY, are sort of coming down into this short-term daily cycle low. We see that the market is about to open a bit lower compared to the close yesterday. Next, looking at seasonality in copper, since the start of that commodity bull in 2015, it's also a little bit tricky. It doesn't completely agree with what we see on the cycles. Copper usually rallies all through February and usually declines mostly all through March. But if you exclude 2020, that's when that pandemic drop kind of skewed the numbers, perhaps, then the seasonality picture looks a little bit more to what we would expect based on the cycles, perhaps a bit of a push higher into a new cycle all through the second half of February into early March, followed by a bit of a topping pattern near the tops of that cycle. Again, seasonality is simply based on historical performance, and nobody knows the future. Still, I do try to provide as much value as I can, and one way I do that for the members at myfinanceteacher.org is through my constant quest for some of the most fascinating developers with very promising potential. So for more details, join us at myfinanceteacher.org. Have a wonderful day, and let's see the markets opening in about 5 minutes. Bye-bye.